what are some of the most important tax changes in the OBBA that we need to understand?
Sure. From an M&A standpoint, there's sort of three that stand out particularly in my mind as being very appropriate depending on what your exit strategy might look like. And the first, of course, we've talked about it a couple times already at a high level, but is the expansion of the qualified small business stock rules, or QSBS. And there really was a good relaxation of those rules. I'll tell you from a planning standpoint, anyone prior to July 4th who was in a corporate structure probably has thought about this to some degree, and those old rules will still apply. Anyone looking to exit or start a business after July 4th has the opportunity to think about if they can plan into this. So again, this is a huge topic. I'd like to spend a lot more time on that one, but in my mind, that is one of the bigger ones because it does create a lot of opportunity for people planning to either start a business today or in a structure today that can accommodate QSBS planning. The other ones that are big, again, from an M&A planning standpoint, are the individual state tax deduction limitation went up. It was $10,000. It's gone up to $40,000 with some phase outs. So some of the taxes you may pay from a state standpoint may be offsettable on your federal income taxes. A lot of give and play on that. You'd have to understand exactly your overall tax situation, but something that is important because that deduction is now raised. Similarly, the qualified business income exemption has been made permanent. So there is basically a haircut on any flow-through income. So as you're thinking about alternative structures and operations, maybe that influences which direction you go from a corporate versus a flow-through standpoint.
A lot to obviously think through on these topics. And I think in so many cases, it will boil down to case-by-case considerations for each individual business. And the devil's going to be in the details. So it's always going to be very worthwhile for you to have the right resources, advisors for you to make the right decisions. A fair amount of planning is required around this. QSBS is a big topic in the OBBA, and I know we're going to have a podcast dedicated exactly to that. So just at a high level, if you could just tell us, how does the OBBA change that treatment, and what does that mean, for sellers?
Yeah, that's a great question, and I hinted at it a minute ago. But July 4th was a big date. The rules essentially are very taxpayer friendly. They're going to certainly make a lot more businesses eligible to qualify for QSBS treatment. Again, very complex, complicated section, so you always have to look at the exact facts. But the biggest ones are that historically, you had to hold your stock for 5 years before you sold in order to get any exemption. So you could do all the planning in the world, but if you sold 4 years and 355 days before the holding period expired, then you would not get any benefit at all. You're taking full capital gain. So that holding period was a big issue. The new rules relax that, not perfectly, but they relax it. Now I can hold it for 3 years and get a 50% exemption, or 4 years, get a 75% exemption, or 5 years and get the 100% exemption. So at least I have a little more planning opportunity. I can run numbers. I can decide when I want to stay in or exit, but it really opens up the door to being able to really plan on how to maximize your QSBS benefit. The other positive or favorable increase or change was that there used to be a limitation on what the value of the business could be when it issued stock. So it had to have assets of $50 million or less. If it had more assets than that, any stock issued after that value would not qualify as QSBS. That's been raised to $75 million. So again, key there is valuation. If you're the sole owner of a business, you're going to have a very particular view of your value, but you want to make sure you have third-party appraisals or third-party understanding of really what the value is, because the IRS is always going to ask,
Mm-hmm.
How do you know that's the right value? What would a third party pay for it?
Dave, thanks for those pieces. Is it also true that the limitation on the amount of capital gain got expanded from 10 to 15 million?
That's right. Yeah, that's a great point. There was also one more. There was the amount that can be excluded is a greater of test.
Mm-hmm.
It's a greater of, and the old rule was 10 million. Now it's 15 million. So I always know I have a floor of 15 million if I can qualify for QSBS. And then the greater of is 10 times your basis.
Let's talk about some of the other things. So the bill also adjusts things like the business interest deduction under Section 163J. And I know this is pretty interesting from an M&A standpoint, and I'd like to talk about that. And then the other piece I thought was also interesting was the R&D expense rules and the fact that you could expense it. Can you talk a little bit about how these two provisions are affecting, or can affect the nature and scope of the M&A transactions that we're likely to see in the middle market space?
Yeah, that's great. You're absolutely right. So when we think about the interest deduction limitations, we call it Section 163J. The historical rules behind it were pretty complex. They had sort of a phase-out period, but essentially you're testing the amount of your interest expense against either EBIT number or EBITDA number. And there was a shift over time which one you're using. So that means now that we are likely to see a lot more leveraged acquisitions, meaning people can take out loans and ensure they're going to get an interest deduction against the operations rather than having it limited or excluded and have to wait to be able to immediately utilize it. So I do expect that to increase more leveraged acquisitions, or even when you're deciding whether to use balance sheet cash or take out a loan, maybe impact some of that.
Mm-hmm.
Similarly, on the seller side, they might have some capitalized interest they couldn't use, and that might look like an attractive asset to a buyer if they're able to inherit that in a form that they can use it, and then meet some of these limitation rules.
That's really
so again,
great point.
taxpayer friendly for sure.
What about the R&D expense rule?
Yep. So that has changed again. I mean, it's changed a number of times over the years. There was a requirement for a few years that any expenditures had to be capitalized. Now they're back to full deductions. So again, great answer from an operational perspective, meaning now I have that immediate deduction, can build it into an NOL or use it to offset immediate income if I have that available.
Side note on this, so with a lot of the AI wave kind of passing through the MSP world, I see number of MSPs, spending money on developing software or AI capabilities, right? Is that the sort of thing that might get captured under this R&D expense rule if they're thinking about the potential deductibility of that expense?
It should. Under current definitions, the R&D R&D is broadly defined.
Mm-hmm.
It looks to innovation. It looks to not necessarily creating something new every time, but even improvements from version 1 to version 2 normally will be allowable under these rules.
Mm-hmm.
AI, as you know, has a little bit of a history outside of tax itself. It'll be, be interesting to see if there's any sort of changes to the tax rules specific to AI. Mm-hmm. But as it stands today, it certainly seems to fit into the definition.
Another interesting one, I think, what it means if I were an MSP owner is I probably should be picking up the phone and talking with a tax specialist on the other side to see what their opinion is about a certain expenditure that I'm taking on in this space, because it could be quite a useful rule for them.
Absolutely. And again, the expense is probably a little bit of a simpler analysis. The credit portion of it is really where a lot of discussion has to occur.
Yeah. Okay. There was also something about the the QBI deduction. It was going to get sunset, I think, at the end of 2025, but now it's become permanent. A lot of S-Corp owners were taking advantage of that. Tell us a little bit about that QBI deduction and what the OBBBA changes about it.
That's right. So again, as you point out, I mean, it's relatively straightforward. So it's just an S corporation, any sort of flow through type entity in the proper line of business. And, typically that was non-service businesses. So unfortunately, accounting firms and law firms don't get to take benefit of it. But active trader businesses essentially got a haircut on the tax rate that would come out or be allocated to the person as part of the tax flow. That was set to sunset. It's been extended. So again, it's one of those things that folks who already have the benefit probably understand it and can rest assured that they can continue on that path. Folks who have not started a business yet or are maybe contemplating a switch to qualified small business stock certainly want to use it as a consideration now as they're running through both operational taxes and exit taxes to figure out their cash flows and their game plan at the end of the day. So again, very taxpayer friendly in the sense of it's an extension and making permanent a tax benefit to owners. But you also need to consider what's your final strategy with it. Is it something you're going to take advantage of throughout the life of your company, or is it something that might make sense to switch away from and go into a corporate form if you think you might get the QSBS?
Dave, thanks so much for talking through some of these aspects of the OBBBA. Again, as we're finding with the earlier topics that we covered, it really is important for people, while to have an understanding, to also speak to an expert about their specific situation, because there are many trade-offs involved that often, move in opposite directions, and you need to look at the sum total impact of all of those things. And again, that's just a tax angle. There might be completely other things that are also important for you in your business. What is your view about the future of your business, et cetera, that might influence these decisions? So really great to have you on it. And I look forward to doing our next one real soon as well.
Appreciate it. Thanks very much.
Thanks, Dave.